Hi guys and welcome to the trading show. This week we are gonna talk about
markets all on the rise, our portfolio exciting week, tip of the week, intraday bias on soybeans future, and the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Really interesting week on the markets. As you can see, almost the whole market is up. We only have green signs except for natural gas and the bond future. It has been a very volatile week with very intense movements. For example, let's look at the stock indices ranging from 7% to almost 9% return at 5 days. And when there are these weeks of strong volatility with clear directional movements, the trading systems are able to better capture these movements and make greater profits than usual. In fact, it has been a really good week for our trading systems, but you will see it better later with Alessandro. To take the stock of the week, the biggest rises have occurred on the stock indices, on Bitcoin, which has gained 13.72% over the past 5 days and almost 40% over the last month. In general, we can say that all the financial sectors are doing quite well. For example, metals, soft commodities, cereals, and we also have the historical volatility, which obviously is rising. We know that historical volatility is linked to the directionality of the underlying, and when there are such large movements, it is clear that historical volatility, the standard deviation, tends to rise. A different situation on the other hand as regards implied volatility. We came from the previous week with a strong expectation for the outcome of the American elections, and now the uncertainty, the fear that there was in the markets for what could have happened is disappearing, and therefore the natural consequence is that the implied volatility tends to decrease, so we are returning in contango. The volatility term structure of the VIX futures is not yet in contango, even if there is a first signal on the first and second expiry, but certainly compared to the levels seen in the previous month, we can see a gradual return to normal. So, on the whole, we can say that the uncertainty seems to be fading. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone and welcome to this new appointment with the analysis of our portfolio. I am Alessandro Danos and this week I want to start showing the Titan. There is the software that we use to filter our strategies. This week I want to show you a bigger list of strategies, so a bigger portfolio. In particular, we will put 154 strategies in the portfolio, and then Titan will select the strategies. This portfolio is composed by many underlyings, many different between them. Of course, there is the S&P500, the Nasdaq, but also other equity indices like the DAX, the German DAX, and also interest futures, metals, energies. So it's a very diversified portfolio, and we can see here that we have set an initial capital of 100,000 with a daily risk of 2%. Having a look at the backtest, now we can see that 2020 was a very good year with the Titan filters. And of course, the filters, the strategies, that Titan provided us during this year were always very profitable, and so we can be for sure happy. Also, if we take a look at the profits, we can see that are around 117,000. So if you remember, we have set an initial capital of $100,000, so it's a performance of over 100%. Of course, the drawdown is also big, we can see it here, $36,000. But of course, we must consider that 2020 was the year of the pandemic and the coronavirus in general, lockdowns all over the world. So it's quite normal that in a year like this, the drawdown was a little bit high. Now we can take a look at the trading systems, and we can start from this one on Bitcoin, and we can see during the last week has managed to reach 4 consecutive targets with this long, and now has taken a stop loss in this last trade. And we can see from the report that the equity curve has reached new equity highs. The volatility generated by the Bitcoin futures has been really high. And so the system, there is a trend follower one, has benefited a lot during this last week of big volatility. Also, this system is a trend following one on the Bitcoin futures, and we can see also here that the volatility has increased a lot during the last week. And also this system managed to reach new equity highs with this very good long trade. Now we can move to the S&P 500 market that has moved a lot during the last week because of the elections, of course. And I want to show you this system that I've showed you already during March, April. And then from that moment, the system was in such a lateral period. With this trade, the system managed to reach over 200 points on the S&P 500 with this long. This strategy is a bias that enters on Tuesday and closes the position on Thursday at the end of the session. And we can see it here that the strategy managed to reach good profits during the pandemia period here. Then a period of laterality, and with this last trade, the strategy managed to recover from the losses and reach new equity highs. We can see also here the proportion of the trade that was really big, 200 points on the S&P 500. Now let's move to the metals market, and in particular I want to show you something that this week was really unlucky. In particular with this system that was short from this point. The market was going on our favor, and then the market has rebounded until reaching a stop loss. We can see that this trade caused a drawdown. This is the equity curve, close to close. And looking at the list of trades, we can see that the profit target is $9,500, and the strategy just for $150 didn't reach the stop loss, and then rebounded until a loss trade. So really an unlucky trade, but fortunately on another system, this one on the gold, we know that gold and silver are strictly correlated markets, and here we have reached a take profit with the long, Here we trade this system with 3 contracts, reaching a profit of over $10,000, recovering from the losses occurred on the silver market.
Hi everyone and welcome from Andrea Unger. Today I want to show you a particular behavior of a certain market, and today we are talking about the soybeans future. Soybeans is a future that is listed on the CME exchange that is based in Chicago, and the multiplier, so the big point value of this future, is equal to $50, and the minimum price fluctuation is equal to 1/4 of a point, that is equal to $12.50. So this market has a very particular behavior. In fact, it seems that the session can be divided into parts. The first one goes from after the midday launch pause, so after 1 p.m. approximately, and it seems that at this hour starts a consistent bullish trend that lasts until 3 a.m. or the nearest hour of into the night. And at this hour of the night, so approximately at 3 or 4 or 5 a.m., it starts a bearish trend that lasts until 1 p.m. or in general approximately to the lunch time, so near midday. Of course, we are referring to the American hour, so the Chicago trading hours. And here you can see the report of this very simple idea, and the A shape of the equity seems to be really consistent and really nice. And this is of course a nice factor, and it seems to be a very robust idea to start from to create a trading strategy. And you can also have a look to the annual period analysis, and from here you can understand that this behavior seems to be extremely consistent all over the historical period considered. And this of course is a positive factor, but the main problem here is that the initial average trade is extremely low, and in fact is approximately 3 ticks. But the problem here is that it seems extremely hard to filter efficiently this strategy, and in fact I tried many times to develop a strategy based on this idea, but then at a certain point I decided to give up, because I was thinking I was falling into the overfitting by trying to raise this average trade and to make it affordable from the point of view of the impact of the slippage and commission. By the way, this phenomenon seems to be extremely solid and extremely consistent, both from the long side and from the short side. So this is of course a valid idea in my opinion to start from, and you can try as well as I did to develop a strategy based on this concept on this market.
For the next week there will be no rollovers, at least among the main futures on which we are active. I would like to point out, however, that the first expiring contract is December crude oil, which has November 20th as its settlement date. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.